What credit problem? So, in the last month, China has added a record 685 billion with a B dollars in total aggregate credit. How big of a number is that? Well, that's it borrowed 5% of GDP in 1 month. That's 60% of GDP in a year. That's a peak World War II level of borrowing, according to Michael Every from Rabobank strategist. So this is a Zero Hedge article, but the $685 billion in credit aggregates was cited by McIlvaney Research. So just an insane amount. To put China's credit binge and borrowing binge in perspective, remember I've been saying for a very long time now that China has changed a lot in the last 10 years, especially in the last 3 or 4 years. Well, China accounts for more than 60% of all new credit created globally in the past 10 years. So China has been largely responsible for this global economic recovery in air quotes, in addition to what the central banks have done. So throw in the Chinese credit binge and all that money leaking out of China combined with what the central banks, the 5 or 6 largest central banks, have done. Crazy stuff, man. And many Chinese are in debt up to their eyeballs, okay? A lot of people don't want to talk about this. People in the gold community don't want to talk about this. People in the alternative media don't want to talk about this. They're bringing up accurately how China on the tick reports is dumping treasuries, but China is not dumping treasuries because they necessarily want to and want to crash the dollar. They're dumping treasuries because they probably need the cash and they have to raise cash, okay? They are down to, according to Kyle Bass's latest article that I talked about in my live stream last week, that he wrote about the U.S. and China trade deal and some strategy that he would, advice that he would give to Trump on negotiating a trade deal. China is down to, I believe, below $3 trillion in reserves now. So that would make sense that China would need to go out and raise more cash if they're that low to reserves. So China is just on an insane credit binge. This month is a record. Okay, an insane record. That's in addition to, the over 40 trillion US dollars worth of credit in their economy already. They're just going for total broke. They won't allow deflation. They had some bad manufacturing and economic data, and they're just all in on credit. And it's a dangerous, dangerous game they're playing, because I've been doing more research about this, and many Chinese throughout their economy are in debt up to their eyeballs. So if you're a young man in China of the marrying age, your parents probably have to go out and buy you a house so you can get married, because as part of the customs there, basically a dowry that's expected. And listening to the YouTube channels, the free ones, the China vloggers that I've told you guys about over the years, and some of you guys told me a few of the other channels, but basically it sounds like a lot of the top graduates from the tier 1 Chinese universities, even if they graduated top of their class, a lot of them, if they decide to stay in China, a lot of them only make about $8,000 a year there. So they have student loan debt. The $8,000 per year in China will not get you very far anymore, because the cost of rent in a lot of the major cities, tier 1, tier 2, it's even for like a really bad place to rent, it's like $2,000 a month or more to rent in a lot of cities in China, tier 1, tier 2, tier 3. So that's how overcrowded things are getting in China. There's been enormous stagflation in food and rent in China. And the data that's come out with China's housing bubble is that a lot of Chinese families own more than one investment property. So there's a lot of people now in China with mortgages on not just one, but 2 or even 3 properties. And CNBC, as I covered a couple months ago, CNBC here in the US ran an article saying that Chinese families are willing to take mortgages out to buy property here in the US too. So China is in a debt binge, and some of the smarter Chinese who see maybe a currency devaluation, other problems up ahead with credit in the Chinese economy, that's probably why they are buying gold for themselves. Well, Jesse, a lot of people live in tiny apartments in Europe too. The European Union is a renter nation, so is England. People have flats? It's called flats there. So a lot of people don't necessarily buy them. And the U.S. is turning into a renter nation too, because most people can barely afford to rent, and the cost of the rent costs in a lot of major cities has gone up. A lot of people in our generation, Jesse, or younger, can't really afford to buy a house right now because there's been so much asset price inflation. The baby boomers, the older generation, has forced it. So just an enormous amount of credit created by China in just the last month, and some of the other moves that they're doing. There's a bunch of scumbags I could talk about today. So many scumbags in so little time. Jim Cramer actually said something else that's really stupid. He said, "Don't let Wall Street convince you that there's a Fed-induced bubble." What a moron, right? Oh my God. That guy has to be a paid clown. You know what I really need to see? I haven't seen anyone do this. I need to see someone with the chutzpah or balls or cojones willing to, who's good at drawing or Photoshop, take like Jim Cramer's head and put it like on a clown's body, or take a clown's head and put it on Jim Cramer's body, okay? Make both of those things, and I'll put them on the Wall Street for Main Street Facebook group, or I'll put it on my Twitter. Maybe we'll have some type of contest. I'm looking for like an economic cartoonist that could do it. Of course, Kramer might get angry, but I think it would be freaking hilarious because he is a very highly paid clown. Okay, let me take a look at some more of the current events that I wanted to talk about. So there's been bad economic data that has been coming out, but the stock market, the Trump and pump, the Trump and dump, the pump and Trump, I forgot all the other ones that I was talking about. The new one I came up with was just the Trump and pump. So I combine. There's so many funny ones to come up with. You know, basically, as long as the stock market is open now, President Trump and Cocaine Larry Kudlow are going to try to put out some type of press release saying that the U.S.-China trade negotiation, excuse me, the U.S.-China trade negotiation is close. So anytime that the stock market is not looking good, oh, it's time for a press release today. New normal now. We got the president and all his economic advisors almost on a daily basis. If the U.S. stock market is open, they are willing to literally pump the stock market. Come out there and issue a press release about a trade deal with China. Eventually, there will be the law of diminishing returns, though. So this will wear off at some point. Maybe. Hopefully. I don't know. The market can stay pretty irrational. I mean, I was talking about this with a friend. He's a high net worth libertarian, and I was telling him how my friend Jesse, I'll just read my friend Jesse Colombo's tweet about the stock market being broken. So let me pull that up real quick on the Wall Street for Main Street Facebook group. He says basically that the stock market has been okay, here we go. These markets, in quote, are completely broken. I just want everyone to admit it. No, it's not a cop-out. No, it's not a figment of your imagination. It's reality. They've been broken since 2008, but there's levels to it. What we saw since December of 2018 is on another level, hashtag broken markets. So basically, the markets just become more and more broken. And my friend asked, what does he mean by broken? And I said there's no price discovery, increasing amounts of intervention and manipulation. Trump is pumping stocks with claims of a China trade deal being imminent. And my friend asked, how do we know there's no price discovery? And so I just tell him that it's really simple. A lot of larger buyers of stock on Wall Street freely admit that they are not buying stocks for any fundamental reasons. These are professional money managers, but because they expect more QE from the Fed, the comments about the balance sheet and reducing QT. So basically, that's greater fool theory, that they're betting there's not real buyers and sellers making fundamental analysis devoid of central banks manipulating markets. So basically, with this greater fool theory for the stock market now, and the stock market may go a lot higher. I mean, we've had a stock market rally, but I don't think any of it is fundamentally driven. Okay? And I'll give you more examples of why it's not fundamentally driven, because we got more bad economic data. Industrial production is now negative in Japan, the EU, the US, and Mexico. And let me pull this up from Zero Hedge. A shocking Philly Fed collapse number, the biggest drop since 2011, US rating downgrade. And business spending suffers longest contraction since 2015. So we've had a lot of other economic data come out that is not bullish. But the real economy and the asset markets become more and more divorced. And that's the point that Jesse was making. So there was another interesting article with research from MarketWatch. Mark Decombre, C-A-M-B-R-E, Decombre. I'm pretty sure I screwed up the pronunciation. Came out a couple days, yesterday the article came out, how trillion-dollar stock market index funds are vulnerable to manipulation that could harm American investors. There's a number of other articles in here with research, and in the research, it talks about how the Chinese Communist Party has been pressuring Wall Street, and I think even the Wall Street Journal, or Morgan Stanley. Yeah, it was, okay. I got the details right now. So for instance, I'll just read it rather than trying to recite it from memory. For instance, MSCI, which is a Morgan Stanley index, added Chinese issuers to its emerging markets index after what the Wall Street Journal said was pressure from the Chinese government. So there's an article in here with additional research about that. I mean, all these, the proof just comes out all the time from the mainstream media, from the alternative media. All these governments are looking for new ways to lie and cheat and steal. The central banks too, to manipulate and rig markets. And remember, I talked about a age war coming up. Jeff Gunlock did another interview for Yahoo Finance that's on for free on YouTube that came out a couple days ago, and he said that baby boomers are getting 7-to-1 benefits versus millennials and Generation Xers and Generation Z that is putting money in. So eventually, at some point, the politicians are going to decide that the baby boomers, even though they vote a lot, that they're dying off, and that they're going to want to switch over to taking care of the younger people. And if that doesn't happen, the younger people are going to start revolting, because it's a Ponzi scheme if you pay in as a worker with your paycheck to all these programs, and they take out more taxes and they withhold more money. You know, when I was a full-time employee, I didn't even see about a third of my paycheck. And the more money, I never even saw any of it. And because, you know, all the taxes and withholding and the Social Security, all that stuff's taken out, and payroll tax and all that stuff. Milton Friedman's comments on the payroll tax were actually interesting. He admitted that the payroll tax was an enormous mistake, I think later on in his life. Lord Humongous says the Ponzi is popping. I mean, there's so many Ponzi schemes that are set up, whether it's Social Security or so many other things. A lot of things are Ponzi schemes nowadays. It's really sad. So we've had a little bit of a rally in oil. I don't think it's really enough, but we'll see. Let me take a look at some more. We've had a big rally in gold for a while now. A little bit of a pullback, though, the last couple days. Gold is down when we're recording this to 1322, and silver is below 16 at 1577. But it looks like that people are starting to accumulate because, like I said, a lot of the fundamental data from the global economy is not good. A lot of the economic data, the fundamentals from the global economy is not very good, and that definitely has people worried. There's obviously still more bad stories from Europe. Let me pull up the dollar index really quick. The dollar index is still holding pretty strong at 96.6. So it hasn't closed above 97, but it's kind of chilling around there for a while. So I don't know if it's sputtering out. It just seems range bound for now. So I'm not making a call on a top. I don't see any evidence of that. The VIX is shockingly back down to 14.46. Any news on credit impulse? I'm not sure what you're talking about. Okay, let me check some of the other news stories that I want to see here. Oh, so the state of Illinois hopes to fix this $134 billion pension shortfall by issuing more debt. So Illinois has a problem and they want to issue more debt. Illinois is a deadbeat. They have tons of people leaving that state. A lot of people don't want to pay property taxes and own houses there or condos there. They're leaving. And so, yeah, we'll just fix the problem by issuing more debt. I don't think that's going to work. There's fundamental problems in Illinois. There's also fundamental problems in Italy. Italy's a basket case, too. I saw a great 3-part special from a couple weeks ago that Real Vision TV released where Grant Williams went to visit one of his friends in Italy. And they toured Florence. They saw the Duomo, Il Duomo. They went to Banco Monte de Pesci in I forgot the other Italian city. So it was a very cool series. Okay, so let me take a look at some of the listener questions and comments. I think I covered pretty much everything that I wanted to cover. We've had a rally in crypto. That may have to do with some of the problems in China and also the global economy slowing down. If things are really as bad as they seem in China, you're going to have a lot of capital flight, which means that money is going to go into gold, money is going to go into crypto, etc. So the narrative that the gold community is selling, that, China's doing great, China's dumping treasuries, China's buying gold. China's in a lot of trouble now. China's added an enormous amount of credit. China may, at some point, it's almost as if China is intentionally trying to get to 500% debt to GDP. Hello, Joe. I have to figure that out for the Bitcoin donation. I honestly have no idea. So I have to look that up. Hello, Jesse. Yes, I agree. Australia is in trouble too. Canada is not too far behind. But Australia, it seems that 60 Minutes Australia is they release like those videos, but it's kind of too little too late. And the rest of the Australian media is still lying. And it looks like the banks are going to get a bailout. So I think Australia will still have problems, but in the whole scheme of things, the whole global economy, I don't think Australia is big enough to take everything down. I don't think there's enough derivatives or bets there to take everything down. Because remember how like the alternative media and the gold community were saying that, oh, Greece is going to collapse everything, oh, Cyprus is going to collapse everything. They didn't collapse everything. Now, maybe the rules were changed and they were going to collapse stuff. This is the problem with the lack of transparency. We just don't know what went on behind the scenes with the Federal Reserve and the European Central Bank, and how much currency swaps were issued or rules changes for bankruptcy. We know that European banks around between that period of like Greece starting, I think 2011, which is when the U.S.'s credit was also downgraded and gold was getting close to 1900, and then Cyprus like 2 years later. We know from like 2011 to present, there's been a number of European banks that have been nationalized already, with talk of more. Well, Peter, I don't think the people in power can necessarily announce bailouts for everything, because especially in Europe, and I talked about this in Eat the Rich, things are getting to those pitchfork, destabilizing society, total society breakdown levels. And I actually have an interesting story about that. So I was watching a speech from Doug Casey from last year's Capitalism and Morality conference he gave in Vancouver, and he said that he's friends with like a futurist, a technology expert, and the technology expert was hired by 5 hedge fund managers, and the technology expert was paid a lot of money by these hedge fund guys, these really, really rich hedge fund guys. And the technology expert spent all this time coming up with presentations of future technologies and probabilities for which technologies he thinks are most important, and the futurists and technologists. And so he had the meeting with he was ready to go and give a presentation to the hedge fund guys, and the hedge fund guys were basically like, they only asked one major question. They were like, we think there's going to be total anarchy. We think society is going to totally collapse. We think there's going to be pitchforks. We think governments are going to be overthrown or revolutions in multiple countries, large countries that you would not expect. And their question was, we have all this money. We can afford like bunkers and mansions with, armed personnel and gates and all this stuff, right, to protect ourselves. But how do we prevent the mob from wanting to tar and feather us and kill us? And Doug Casey, the story he was telling was, the technology guy says, well, maybe you should be nicer to people. You should be friends with people in your local community. So everyone doesn't want to say, hey, that's the rich guy over there. He lives down there. You want to go murder, rape, and pillage him first. So if the rich people who are making money off the status quo are asking questions like that, I think, things are further along than a lot of the people in the mainstream would care to admit. Okay, so I'm done with my little rants. Take a look at the listener questions and comments. We're only at 20 minutes here. I didn't plan on doing anything too long. I just wanted to get the China stuff out there. I mean, there's so many examples of Chinese debt problems and credit problems now in their society. The old adage in the past was that Chinese people save at least 40% of their income, but with the rising cost of rent and food in pretty much all the areas of China, there's an overcrowding problem. And on top of that, a lot of the buildings and condos and all those things that have been built in China are not up to code, and they're already falling apart. I just saw a new video from Lauy86 that he just put out yesterday, and he wants to sell a new condo. He had to buy the condo in order to marry his Chinese wife there. He's American, and he's lived in China a long time. And he had to buy a condo even though he didn't want to buy one. It was like as a dowry or whatever, so his Chinese wife's parents would approve of the marriage. And the condo already has like major construction problems with it. Like they showed in the video, like enormous cracks in the foundation and other problems. Enormous cracks in the walls, other problems. And I got a little off tangent there for a second, because, most of this is off the cuff. People are like, why are you using the word like? Why are you doing this? Well, most of this is off the cuff. I don't have any notes here. Okay, but the old, not proverb, the old cliche was that Chinese people just save a ton of their money, but for the most part now, this is no longer true. Okay, now occasionally from what I've heard, if you want to save your money in China, you basically have to live with your parents, you can't eat out, you can't date, and your mom has to cook you like cheap food, or you have to eat really cheap food that can get you sick. But if you want to rent an apartment in a tier 1, tier 2, or tier 3 city, even if it's falling apart from what I've heard, the rents on those are really high. And the food prices, over the last 10 years or so with the stagflation there, those food prices have doubled. So there's a lot of Chinese that want to get out of China. And I actually went on a date with a girl from Beijing a couple years ago who had gotten a bank job here in the DC metro area, but that didn't go too well. She was pretty bitchy. She was very bitchy, actually. I had one date. I don't want to go into any more stories, but you could tell that she was making a lot more money here than she was in China. She lied to me about a bunch of stuff. She had a boyfriend and a kid back home. I found that out like after our first date. So she lied to me about that too. Okay, I'm done with my stories and rants. I can look at listener questions and comments now. Everything's just going off on tangent. There's no notes here. This is disorganized. Unlike my Eat the Rich video, which I released yesterday. Spent many hours on that. I think I spent 4 or 5 hours yesterday alone. But I spent hours before that. So it's over 5 hours. The exact amount, I didn't write it down, but it was a lot. DSV Duong taking playbook from Japan and the USA. Well, this is what happens with Keynesian economics and central planning. You don't allow a credit bust. You don't allow the malinvestment, the bust. You don't allow bankruptcy, and this is what you get. You get best case scenario Japan. And Japan hasn't collapsed, their society hasn't collapsed, but they're definitely lying about their inflation data. I mean, the cost of living in Japan in a lot of major cities in Japan is insane. And they say there's no inflation, but the cost of rent in Japan is high. A lot of other costs in Japan are high. So best case scenario for a lot of this is like worsening stagflation or Japan. And this is what always happens with Keynesian economics. This is why I hate Keynesian economics. This is why I hate socialism. Jesse makes a good point. They all live in tiny apartments, laundry machine in the kitchen. Coming to the U.S., man. Coming to the U.S. because you're going to have a lot of fairly affluent or better educated Asian college graduates or grad students or people with work experience from China and from probably mainland China willing to move to the U.S. Because number one, they can make a lot higher salary here in the U.S. And it's not as overcrowded. And it's not, from what I hear, the girl in Beijing, she did tell me a few honest things on the date. She said things are a lot more competitive in Beijing and Shanghai than here in the U.S. She said you cannot comprehend competition here in the U.S. compared to China, and how things are in the street and other business ventures. Martin asks a very good question. What's China's end game with all this credit? Well, initially, I think they wanted to implement some good infrastructure, but they've just gone crazy. And I think the end game with all this, as I reported with my source about China bailing out the factory owners and not calling in their loans because the Chinese government owns 90% of all their banks. And I think their end game is to maintain government control. And they have the social credit score stuff that they're rolling out and implementing fully. Like, it's going to be super draconian. It's pretty bad now, but it's going to get even worse in the years to come. And I think their end game for the Chinese Communist Party is to maintain control. So they don't want to allow a collapse of the economy and collapse of society, because that's the type of thing that could mean another political revolution, and then the government gets overthrown. And most of the people in power at the top of these governments, they're probably not going to be around too much longer. Especially like in the US, where people can get voted out. Look at the damage that Angela Merkel and some of the other European politicians did. They're not going to be around when the shit really hits the fan in Europe. They're going to be long gone. Mario Draghi's probably going to want to get out soon, if he didn't already leave yet. So and he's at the European Central Bank, former Goldman Sachs. So you're going to have, Europe is a mess. You're going to have a lot of the European politicians that have done this over the last 10, 12, 15 years that have caused all these problems. You're going to have them bounce. They're going to get out. They're probably already buying gold and real estate in other countries. Maybe New Zealand. I don't. The elites, for some weird reason, the elites seem to really like buying compounds or lots of land in New Zealand. Is that because there's a lot of sheep and not too many people? We have a lot of listeners here from New Zealand, so my listeners from New Zealand can answer this question far better than I can. But New Zealand seems to be a popular James Bond villain location. Jesse asks, when will the Fed funds rate be higher than inflation? Well, Jesse, I don't know if the Fed is going to hike anymore. So are you talking about the official CPI or the real inflation data? Because the real inflation data, the Fed funds rate is probably not going to be higher than the real inflation rate in the US without everything collapsing. The real inflation rate, according to the Chapwood Inflation Index, which is free, you can bookmark that website, show it to your friends and family. They survey, what Ed Butowski, I interviewed him years ago on my channel about this, and his methodology is he had really long conversations and emails with John Williams of Shadow Stats, and he just took it to another level. So he surveys a bunch of people in different cities a couple times per year for 500 different consumer items and tracks like unit prices and also like cost rising of different consumer items. So if we do, Paul Volcker even said that there cannot be another Paul Volcker. Alan Greenspan thinks there's a lot more stagflation coming, and the mainstream financial media are calling him crazy, even though I think he's dropping truth bombs and being honest, because I think we already have stagflation now that the mainstream financial media are lying about, and the government economic data is lying about. DS V Duong says they're all bluffing at the poker table. Yeah, basically. It's stagflate and lie, man. But they're coordinating. The 5 or 6 largest governments and economies and central banks are all coordinating with each other. Now, China, I don't think China is in that group necessarily, but maybe they are. China does have a pretty large seat at the table now at the IMF, but I think the US, European Union, Bank of England, Bank of Japan, those guys have been coordinating for years. Really since 2008. I don't think that coordination has stopped. So they took turns. This was an interesting, I can't remember where I heard this. I heard this week in my research, but some money manager said basically that either the European Union, the US, Japan have taken turns every 18 months with a strong currency, and then they have a lot of problems, and then they have to switch it up and change. And that's been going on for years, since 2008. Peter says, looks like the Fed is done with interest rate increases and perpetual QE is now the path to take. I'm going to skip the LOL. We're into the dystopian future that I knew we would get. The future has arrived. Well, the elites are all about maintaining power, and if you've read Machiavelli's The Prince, and this was one of the main things I remember in there from rereading the book again a couple of years ago. It's not a long book if you haven't read it. And what he said in there basically is if you're running a government, whether it's like a large government or a small one, he was like, if you don't want to get booted out or regime change or to get murdered by the people, he was like, you lie as much as you can until you have to tell the truth. So he was like, you lie and lie and lie to maintain power or to increase power, and then you only tell the truth when it's convenient. And I think, a lot of politicians adhere to that. Jesse says, Jeff Gunlock said corporate bonds are misrated. Yeah, I totally agree. It's because the ratings agencies won't do their job. The ratings agencies are either corrupt or stupid or some combination of the two. Corrupt, stupid, lazy. Some combination of the three. The credit ratings agencies have rubber stamped a lot of these companies that have investment grade credit ratings, and they do not deserve those credit ratings. So people are looking for the next General Electric. One of those companies was like Campbell Soup, and there's Kevin Duffy mentioned on his interview with me last month, Procter & Gamble. There's a bunch of others. Okay, there's a troll there saying really racist stuff. I think I should eliminate him. I can't even read that. That's how nasty that was. Okay, well, there's a bunch of other questions and comments down here. It's gonna take too long to get to them, so I think I'll wrap up the show for now. If you have any additional questions and comments, put them below the video after the video is done, because I can't respond to all of them in the live chat. There's just too damn many. Hopefully you liked my Eat the Rich video that I released yesterday. I put a lot of hard work into there. One of my listeners actually said that it's Stefan Molyneux quality, so I'll take that as a big compliment. I don't have anywhere near the resources that Stefan does. I mean, he's shown a video of his nice new studio and all the expensive camera equipment. I wish I had that stuff. I don't have any of that stuff. Okay, guys, well, that's it for now, and now that China's a disaster too, I would not respect or pay attention to the gold community and the alternative media people that are continually repeating now how well positioned China is, okay? Show them the articles, show them this podcast, call them out on their bullshit, because you know what? If the facts change, their opinion needs to change. And it looks to me like now China keeps misallocating trillions in capital, and they are now too one part of this giant global clustercluck.